Hey, what is going on, guys? It's Milan here, back again with another YouTube video. Thank you guys for watching the podcast last week. A lot of you guys liked it. A lot of you guys left some comments, DM'd me on Instagram and Twitter, letting me know what I can do better, and I truly appreciate it. I cannot wait to get started on the next podcast coming out hopefully sometime this week. Today I have a video about charts. I just want to, explain charting to those who are new, those who are beginners that don't know anything about charts, that want to get to investing, that want to get to day trading or even swing trading, want to learn how to read charts better, get your technical analysis better, and all that good stuff. Um, I want to show you today what I use on charts, the studies and indicators that I use, and sort of briefly go over resistance and support because I think that's one of the most important things when it comes to charting. With that, let's get started into today's video. Leave a like if you do enjoy the video, subscribe if you haven't already, and let's begin. Right here, you'll see I am currently logged on to my thinkorswim platform. This is a free platform given by TD Ameritrade, and I use this thinkorswim platform ever since I moved to TD Ameritrade as my brokerage. Now, if you don't have TD Ameritrade, or if you don't want to download thinkorswim, or you just can't be bothered with this platform, go to tradingview.com on your browser and make an account. It's completely free, and then you can just chart just like we do on thinkorswim. It's completely the same thing. Some people even say it's better. I just use thinkorswim because that's where I trade on, but you can draw 10 trend lines, look at charts, analyze patterns, all of that. I actually got started with TradingView, and after I switched my brokerage, I started trading on charting on thinkorswim. But TradingView is just as good as thinkorswim. It's completely free, so you definitely have no excuse to not get started on either platform. And if you want to become a better day trader or even a swing trader, start learning how to read charts. So if you look at my screen right here, all of this could look very confusing to you, but don't worry. I'm going to break everything down for you, try to explain why I have these indicators, and try to explain my chart setup, how I like my time frames, and all of that good stuff to sort of give you a better understanding of what you need to begin charting. Now, let me remove everything off of here first so that my chart is bare bones to the minimum, so that you guys can see the same thing that I'm seeing. I keep on hitting rename, but I thought it said remove. Here we go, remove drawing. Let me then get rid of my indicators. And this is probably what your chart looks like when you first get started. You guys are probably used to seeing line charts, so something like this. If you were coming over from Robinhood, and you guys, or just any charting platform, or you're a complete beginner, you see these lines. So you see that this stock moves up, this stock moves down. You see these line patterns, and you say all is well. But I highly recommend you guys start trading with candlesticks, because candlesticks give you the better edge when trying to indicate a bullish or a bearish pattern. So if you look at this, I have candlesticks here, and this is what you would want for trading, day trading or swing trading. Now let's get started on the chart style that I like to do. Go to this gear icon here next to your time frame, and click this. When you first begin, your overlap volume is probably ticked on, so it will look something like this. And you can see it's very jumbled up. It's not very pleasant to the eyes, and that's why I like to take that off, because I like to be a little organized when I trade. And when you take it off, you see it separates the volume from the charting area, so that you can see the clear differentiation between volume and your candlesticks. After that, you want to go to time axis, and your expansion area is probably going to be at 0. Let me wait till my keyboard starts connecting. Okay. Your expansion area is probably going to be 0. All that means is there's no expansion area right here when the stock moves intraday, or even 1 hour. You see it'll bring it right to the edge of the screen. I don't really like that, so what I do is I go to time axis and I change this to 200. Okay. And after I do this, you can see I have all this gray area right here for me to chart on. If I'm drawing trend lines or something like that, if we look here, if I want to draw a trend line, I have this area that I can scroll over to and sort of analyze, okay, it could bounce here, it could go here. It's just clear to the eyes, like I said before. And I like to be organized when I chart, so having this 200 expansion area really does help, if I want to scroll over or scroll this way or whatever it is. So if we go back to this gear icon here and go to favorite time frames, this is where you can make your time frames. Feel free to pause the video and then copy my time frames. I think the 1 minute, 5 minute, 15 minute are very good for day trading. And then if you want to swing trade or trade weekly or whatever it is, look at 30-minute, 1 hour, 4 hour, and even daily charts. And those are the best when you want to swing trade. So you can all you have to do is go to favorite time frames, go to add a time frame, and then whatever it is, 5 years, 1 day, or 5 days. You can change this to 30 minutes, whatever it is. You can add, and then it goes right there. I had added to 1 minute, but you get the vibes. Go to appearance next. And this is important. Like I said before, you can change your chart type. I know some people that use bar charts that are really good with trading, but I really do prefer candlesticks. And if you're a beginner, you need to understand how candlesticks work. We have a document in the Discord under education teaching you guys bullish and bearish candlestick patterns. And those are crucial because you'll see a hammer here or a shooting star here, and you'll hear us talk about, bearish shooting star on the 5 minute here, watch out for a reversal, all this stuff, but you might not know what it means. Go in the education box of the Discord, look at that document where it says bullish and bearish candlesticks, and sort of get a feel for what's going on here and educate yourself on that. It's going to take some time, but you'll understand once you start familiarizing yourself with it. Now, with the green candlesticks, I have them hollow instead of full, so I have this fill up tick, unselected, but that's all personal preference. I like to have it hollow so that it sort of differentiates between the two. And one thing that I would recommend you guys do is change this background color from gray to black, because having a black background color really just sets that contrast so that you can see your candlesticks better. When you have indicators, you can sort of see your indicators better because of the contrast. There's nothing like black on white or black on green, red, whatever it is. Having a black background really does help set the contrast, and it looks really good. It helps you chart better because you're more organized. Now, if you go to equities, options, and futures, your extended hours trading is probably turned off. You see this is turned off. I don't trade Forex, so let's not worry about that. Equities, it's probably turned off. Options, extended hour trading, turned off. Futures, extended hour trading, turned off. All that means is if you look at like a 4-hour chart, you see these gaps, okay? You'll see a gap here. Gap here. You see gaps here. These are big gaps, but you'll see gaps every day, okay? And all that means is basically after hours and pre-market hours, you don't see any of the candlesticks or what goes on. You'll just see a gap up or, a gap down between those. If you go on the, 5 minute, you can see right here, it stopped at 4 o'clock, began trading at 9:30, and then tomorrow at 9:30, the next candlestick's going to open up, okay? And you see there's a little gap right here as well. So I don't like that because having after hours and pre-market trading is very crucial when analyzing key levels and stuff like that. So I have that on, and you see it comes up as a shaded gray background. You see this shaded gray. Now, if you go to a further time frame, say the 4 hours, you'll see that this arrow that I do, this graph down, you see this happened during after hours trading, and you can see that it was shaded up. So all the gray areas are pre-market and after hours, and all the black are intraday. So if you go to settings here, you can save all that, and you can just go there and you can right click you can go to style and you can save your style as, you know, main chart, whatever, main chart 1, whatever you want to do, right? And you just hit save. And then that way, when you load up your screen every time, you can just go to style, load style, go to main chart 1, and then this loads up for you. So after the style, I want to get you guys started on the indicator so we can move on with the video. If you go to studies here and go to edit studies, this is where you will start and, you know, sort of add your indicators, add your momentum indicators, your average indicators, whatever it is that you want to add. Do research. You know, you might know something better than that I don't know, but in this video I'll show you what I use and what I've been using to make me the trader that I am today. Let's start off with VWAP. VWAP is crucial, okay? Now, when you double click, when you type in VWAP, you just double click it and then you go to settings, and then it'll tell you the color. I usually change it to dashed. You need to turn lower band and upper band off because we don't really care about that right now. And you just hit apply and you hit OK. And then if you look at, you know, 5 minute, you'll see this dash purple line acting as the VWAP. Now the VWAP, if you look here, is the volume weighted average price. So all that means is that it's a trading benchmark used by traders that gives the average price a security has traded at throughout the day based on volume and price. So it's not like it's not just an average price throughout the day. It weighs in the volume as well so that you can see, you know, if there's heavy volume here, the VWAP will adjust to it. And this website, Investopedia, right now, if you haven't visited it, I highly recommend you guys visit Investopedia. I'll have the links to these two articles, the simple moving average and volume weighted average price, in the description down below. So please check that out. And while you're on here, if anything interests you or spikes your interest, or, you know, you hear about an indicator that you want to trade with, or you want to, you know, just look at anything, you know, they have, look, day trading introduction, they have everything here. And I highly recommend you go on this website and just give it a scroll, give it a browse, because it's a free resource, and I used a lot of Investopedia when I started trading. So just use it. You know, it's the library at your disposal on the finger, in the tips of your fingers. So use Investopedia. I'll leave the links to the websites that I go over in this video down below. And let's move on to the next indicator, the simple moving averages. See, we're getting Discord notifications here. Let me just turn this to do not disturb. Shout out my boy Mason. Okay, if we go to studies here and go to edit studies, I like to use the simple moving average, okay? And it is what it sounds like, the moving average at the price. Now, I clicked it twice because I want 2 moving averages, and so I changed this to 50, and I changed this to 200, okay? And then I'll change the color for the 200 to, you know, whatever. Let's change it to this. Yeah, let's change this lavender color. Okay, so the 50-day moving average and the 200-day moving average. If we go back on Investopedia here, we can see that the simple moving average calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. So it is what it sounds like. So I do the 50-day and then the 200-day because the 50-day gives me a shorter time frame of the moving averages, and the 200-day gives me a longer time frame, and it's harder for a stock to break. So if a stock breaks a 200-day moving average, you know, there's more validity to that break. If you look here, when SPY broke this 200-day moving average right here at 300, started going up and up and up and up and up. And when it breaks the 50-day moving average, it also creates a line of resistance. You can see here, wicked up, couldn't break it, couldn't break it, couldn't break it, and if it finally broke, it shot up. Okay, if we look at it on the line chart, you can sort of understand what I'm trying to say here. You can see that once it comes below this 50-day moving average, it acts as a line of support. So it's like a resistance line. So it just goes up, stops, goes up, stops, and when we finally break it right here, we shoot up. And then when we break this 200 day, when we break this 200 day right here, we start going upwards. Okay. So 200 day and 50 day moving averages, they're crucial, and big institutions use VWAP and these moving averages to kind of determine where they sell and they buy. So if a stock is above VWAP and the moving averages, big institutions will start buying, and if they're below the moving averages and VWAP, the big institutions will start selling. So it's crucial to have these points. I also like to have the 8-day exponential moving average, but that's here and there. If you're just getting started, just look at these averages and go on Investopedia, familiarize yourself with what they mean and what they do, and it'll make you a better trader. It will. Now, the next study that I will add, if I go to edit studies, is the relative strength index, better known as the RSI. Okay, and the RSI is one of my favorite studies or indicators because it gives you the opportunity to pinpoint your exits so you optimize your trading. And what I mean by that is, if you look here, we see two lines on the RSI. So when you're in the middle of these two lines, you're in a healthy area, okay? When you're above the 70 line, you go to overbought area. When you're below this 70 line, you go to oversold area. So if you look right here on SPY, I like using ticker zoom. Okay, if you look right here, right, we're overbought right here, and we're overbought right here. So what happens is we go to this red area, and you can tell that it just took a mean fall downwards. Look, mean fall downwards. Okay, so after you see that, you can pinpoint your entries, and what I mean by that is, give me 1 second. Let me just remove these drawings. What I mean by that is you could see a stock like Zoom just, trending up, and you see it at this high, and you're saying, okay, I'm going to buy it now because there's so much good news on it, stay at home stock, it's going up, it's been going up for days. But what you don't realize it's extremely overbought. So, it's becoming very weak, the stock is. Stocks don't go up forever. I wish they did, but they don't. So what you can see here is this overbought signal tells you that it's gonna come down at least a little bit, and then it completely crashed. And then on the opposite side of that spectrum, when the stock goes oversold like this, your RSI indicator will go blue, or whatever color you have it to set. And then when it goes blue, you see right here, it went blue here, and then it shot right back up. So you can see that you can use this RSI indicator to, if you just add it on your chart, you'll see when a stock hits that red, it's going to pull back, and when a stock hits this blue, it's going to shoot up. So it tells you when a stock is overbought or oversold, and you can sort of pinpoint exit and entry points so that you're not buying at the top and you're not selling at the bottom. Rather, you're buying at the bottom and you're selling at the top. And, this helps you, maximize your profits because you're not sitting there in a little gray space of, oh, when am I going to buy? Or the stock was going up for 4 weeks. After I bought it, it started to crash. You'll see why it's starting to crash. The RSI is probably way overbought. Indicators aren't pointing towards your favor. And then the next thing that could be happening with the stock is that it could be nearing a resistance point, which leads me to the next segue of this video, which is support and resistance. Okay, support and resistance is crucial when you're trading stocks. Crucial. About a year ago, I found out about support and resistance and really started taking it more seriously, and that's when I elevated myself as a trader, because I was no longer just trading blindly. I was trading with indicators and support and resistance. So if we look at SPY here, and let's go to a 4-hour chart. Okay, you can see, I'm going to change this back to candles. Appearance, candles. you can see a clear line of support and resistance here. Okay, let me remove these drawings. Okay, if you look here, this area, this zone right here, this 307.52 area, right? This is a resistance area for SPY. See, what happens is after you go down, you try to come up, and then what happens is it struggles to break that area, and then it comes down. And then after it broke it, it shot up. And then what happens is right here as well, it went up and struggled to break it. So on this retest back up, we're looking for this 307 area to break because it struggled there twice already. If it stalls there and starts going down, we can anticipate a move down because this is a resistance area. Same with support. Now you can see here this 307 also acted as support because it went down here and then shot back up. I can give you a better indicator. This 299 area is support. 299 area acts as support because you'll see here, right? It started going down and then it held that area and then it bounced up. Same thing happened here. You'll see this really nasty wick right here. It's even right here. It touched that 299 area and then it bounced up. It touched this 299 area, went down for a little bit, bounced up. Today, when the market was happening, I'll show you if we go to the 5-minute, you'll see it touched this support line multiple times here and just propped it up, just propped it up, just propped it up. And the market opened, we dropped below it just for a little bit. But if we look at the 15-minute chart, that support line held, you know? So it just went right below and then it bounced right back over, seeing a reversal candle above VWAP, and then we went bullish for the day. So support and resistance. Let me show you another ticker NKLA that we've been looking at for a while in the Discord. Love this stock. A lot of hype going around it right now. And look, I already have drawing set on this stock. You can see that this gray area that I have set acts as a key level of resistance. You can see 76.23 is where this candle went all the way up to, wick back down, and then we approach it again, wick back down, approach it again, wick back down. So we're really struggling to break the $76.23 area. What that tells you is that there's strong resistance there. Once we break that area, you can see the next level that it struggled at before was 83.41. So after we break 76.23, I'll be looking for an entry because we have almost $7 to run, okay? And then after we break this 83, we don't have resistance to all-time highs here. We'll say next level of resistance is right about there, okay, at $91. After we break 91, we're going to the moon. So support and resistance is very crucial, and I briefly went over it today in my video, but I want you to go and look at other people's videos. I want you to go and look at more charts yourself because I can tell you so much about it, but if you don't look and go do it yourself, you're never going to understand it. So after you watch this video, go on your trading platform and, sort of understand what you need to do with support and resistance. Just practice going on demand, or you can even, go to any stock. If you look at Facebook here, look, I already have support and resistance drawn. You can see it clearly on the line chart as well. If you go on the line, you can see where it struggled to break. Right here, 1 touch, 2 touch, 3 touch. And then I was looking, this was Friday, I believe. I was looking at this 222 area, right? Because there's massive support there. Look, 222 area, the stock went down here, went back up. Could not break it. Could not break it. Could not break it right here, right here. You can see these ovals that I drew are support points where it hit the support. Here, it touched the support. We had strong catalysts with all the ads that are being pulled from Facebook. Clearly broke the support. After it broke it, it ran down almost $15, right? More than $15. It went down to $206. So about $16 it went down. and then it started coming back up. Now, as it comes back up, I'll be watching this 222 area because it acts as a level of resistance now. So if it breaks this 222 area, we're getting a clean run up until 236. And all of this might sound very complicated to you, but I'm telling you, just spend some time with it, spend some time charting, and you'll understand how to dictate support and resistance. You'll understand the indicators that you need to use, and yeah, you'll just learn from there. The more chart time, the better. You can watch 1,000 YouTube videos, but if you don't do it yourself, you're not going to understand what's going on. So with that, we'll wrap up today's video. I hope you enjoyed this brief, introduction to charting. I know a lot of people in the Discord, they messaged me saying, you guys are posting all these charts. I don't know what it means, or how can I get better at charting? So, I just wanted to briefly go over the very basics of charting. If you guys want me to go more in depth on how I chart during the day, leave me a comment, shoot me a DM, whatever it is. And yeah, I'll catch you guys with another YouTube video very soon. If you stuck around this far, please leave a like because it helps the YouTube algorithms grow and it helps my channel grow. Subscribe if you haven't already, and I'll see you guys in the next video.